This is Mitch, and welcome to the Real Estate Investor Summit podcast. I'm here with Russ Morgan and Joey Mure, and they're with Wealth Without Wall Street. And we're going to be talking about taking control of your financial future, possibly being able to walk into your boss and say you no longer need his services. You know, the world is your oyster when you figure out how to make your own money and take control of your financial future. It's just how far do you want to go? So we're going to get started in just a minute, right after a little pay homage to my sponsor, taxfreefuture.com. If you don't have a tax-deferred or tax-free vehicle in which to grow your retirement or your wealth, your finances, then you're missing one of the biggest tools in your toolbox, man. Please check out the 37 videos at taxfreefuture.com, because you will not believe what your financial advisors are not telling you. And we're going to tell you what they're not telling you, and we're going to tell you why they're not telling you, and it's all going to become crystal clear. So with no further ado, what's going on, Russ? What's going on, Joey?
Hey, Mitch, thanks for having us on the show. Glad to be here.
Yeah, this is awesome. Thank you.
Yeah, so Wealth Without Wall Street, what an interesting name. It just screams, take control, brothers and sisters. Get a hold of your own stuff and quit letting these yahoos throw your money around and not give a crap. Because, I mean, not to say that these companies don't try in earnest, but they got hundreds of thousands, if not millions of clients. How can you possibly rank with them, unless you're like one of the guys that's invested in the top 10 of all their investors, or the top 20, which most of us wouldn't be,
No, we're never going to be in that grouping. And just what you said, like your sponsor, you said what your financial advisor isn't telling you, and they should. It is probably to do something with your money that you actually know something about, and it's nothing with them.
Well, I mean,
going to tell you how to do that.
You walk into any town, you drive into any town, and there's these really tall buildings there, in any major city. What's the name at the top of that building? It's usually a bank.
It's always
Absolutely.
Or an insurance company. And then you go into one of those banks or the insurance company, and they want to offer you 1% in the CD rate. And they got billboards bragging about you can earn 1% on a CD. It's like, you ought to be ashamed of yourself. It's not even keeping up with inflation. I'd be embarrassed to put up a billboard saying, well, I'm enthusiastic about making you 1%. I mean, that's just stupid.
Well,
but how they really make their money is loaning money. But you think they're going to tell you how to loan money? Well, you can loan money. It's not that complicated, especially not for the ROI that you're going to get compared to what they want to give you. And you can do a better job than them, because guess what? You're not even regulated like them.
That's right. And by the way, Mitch, you ought to be thanking them for putting those billboards up, because that just gives you all the opportunity in the world to take the same people's money who would have been putting it on deposit at the bank and say, hey, let me give you 8% instead. Right? Isn't that a much better deal for you?
You just gave me an idea. I'm going to drive around town. I'm going to take pictures of these billboards, and I'm going to just hold up a sign like a homeless guy. I pay 8%. Right underneath their billboard,
Exactly.
Well, and the sad part about it is people put money in those banks and they feel all warm and fuzzy because of that thing called FDIC, and they have no idea that means that they're insuring your dollars with pennies, and that if the thing goes bad now with the new Dodd-Frank laws, that literally there is no more bailouts of the FDIC, because most people don't realize the FDIC has been bailed out so many times that they changed the rules on that, to where if the FDIC goes under again, and I probably should say when it goes under again, that now the new rules say those who are depositors, those who have put all that money on deposit or getting those fancy 1% returns, are actually going to be the people supporting the functionality of the bank. There is what's called now a bail-in.
Well, I never believed in it even before that, because there's no way that the FDIC, we don't have a gold-backed dollar anymore, so there's no way for them to guarantee it. I mean, it's just
100%.
It's all a bunch of smoke and mirrors. So I figure, I'm going to loan my money on real estate. Someone doesn't pay me, I'm going to get a nice piece of real estate. Now, how risky that loan is depends on how much that real estate is compared to how much I loaned on it. I need to make sure that I have a first lien, and I need to make sure that maybe there's some title insurance or some mortgagee's insurance, because I'm making the loan. So, and I want to be in a first position. So, then I guess you have, you just got to be able to do some math. I'm loaning $50,000 on a house that's worth 100. If I don't get paid my 50,000, I get a $100,000 house. Do I feel like I can make myself whole or maybe even make a little profit from that situation? The
Well,
answer to me is yes.
absolutely. Well, and here's the thing too, Mitch, is that a lot of times people don't realize that these deals are sitting right underneath their nose. They don't even have to go out and find strangers to do these deals with. I know sometimes people think it's taboo to do business with family, but I'll tell you about a deal that literally has been the best thing I've ever seen in my life. My wife borrowed money to start a dental practice in 2008. Great time to start a business, right? And she borrowed like $650,000 in that neighborhood from Bank of America. In 2009, I'm sitting in a conference, and this older guy wrote this book called Becoming Your Own Bankers, teaching people how to literally be the bank in their own finances. Now, unfortunately, my wife and I were not in a position to, finance this whole $650,000 business purchase and creation on our own. But nonetheless, her father's been sitting there. I was the traditional financial planner. That was the guy out there pushing the mutual funds and everything else. And at the time, and then obviously the market had crashed and my eyes were open looking for new opportunities. And there I am, I'm listening to this guy talk about how you can do this. And my father-in-law, I had just helped him sell his Bank of America stock when it was dropping. We put a stop loss on it. So he's sitting in cash. So here he is sitting in cash with tons of money. My wife's sitting over here with a big old debt. And I was like, wait a second, we're paying 7.95% interest to Bank of America.
And Bank of America is paying him 1%.
And they've got his money over here, maybe at 1% at the time.
It was less probably. That was less at that time.
And we put those two deals together. And for the 10 years, we sold our practice at the end of this, at the beginning of this year. And he was getting paid roughly about $6,500 a month, every single month from his daughter. I mean, it was the best deal for both of them, because if he doesn't spend any of those dollars or all of those dollars, where's it going to come back to? It's going to come back to us. I mean, it's just the beautiful
You're protecting
thing.
your inheritance is basically what you're saying.
Well, we were going to give it to somebody anyway. Now, some people think, oh, well, that's really bad. You don't want to get involved in that. But why would you do business with somebody you don't know instead of doing business with somebody you do? So there's plenty of instances where Joey and I have seen that happen within families, and ours is like a perfect example. I think when you're talking about lending, which is kind of one of the 5 areas that we focus on, I think that's a beautiful thing.
Well, hey, I'll throw my hat in the ring. I'll pay you 8%, and I'll put up a property, and I won't let you loan any more than 65% on it. I average 58%. So if I want to borrow money on a $100,000 house, I average borrowing $58,000 in the first lien position from somebody. I have $20 million worth of private money right now. And they've been with me for most of them for over a decade, a lot of them for over a decade and a half, some of them for over 2 decades. These people don't keep loaning me money because I jerk them around. I pay every month on the first. Matter of fact, I asked last week, how much do I send out every month on the first to my private lenders? It's $120,000 I send out every month in payments.
Nice.
So, I mean, that may be someone who's listening on the call today, maybe what you needed to hear, because there's reputable people out there, but reputation's not everything. Try to get, put the icing on the cake and get some collateral that at least if I don't get paid, I get X. And X ain't so bad. Matter of fact, X might make you a lot more money than getting the interest. As a matter of fact, I tell my private lenders all the time, they go, what's the worst thing can happen? I said, the worst thing's going to happen is I pay you on time. Best thing's going to happen, you get my property. So my property is worth way more than you're lending me. And he goes, I don't know anything about properties. I say, you don't have to. Just pick up the phone, call a realtor, call 2 or 3 of them, get a consensus of what it's worth, who you think can sell it the fastest or the best, and give it to one of them. And in 90 days, everything's fine, and you'll probably be taking a vacation on my house money. So,
yeah, no doubt.
Well, at the end of the day, Mitch, I mean, for those who are listening, private lending may not be your way, or it may be your way, but at the end of the day, it's all in light of where are we headed, right? Or we're looking for ways to stop trading time for money. If we didn't have that need, Wealth Without Wall Street wouldn't exist, right? Lending is just one of the avenues in which we try to build up that side of the equation that you talked about in your book, that we talk about every day. We probably all learned it from Robert Kiyosaki, I don't know, but passive income must be higher than our monthly wants and needs. And lending is just one way we can do that on the passive income side.
Yeah, it's one way, and it's probably one of the least, depending on how you set up your loans. I mean, we set up 15-year loans. You can loan it out one time on a really great deal, and you're good for 15 years or until they pay you off.
Right.
So I'm talking to a lot of the loans I've done were 8% interest only for 5 years. But I was dealing with a lot of people that were over 70. They didn't want a loan long term. But when I start talking to the millennials or the Gen Z, or I'm start talking to younger people that have long time to go before they're 59 and a half, they just want to like, hey, I'll do a 15-year loan or a 20-year loan. I want to set it and forget it.
Yeah.
I don't want to go in and out and worry. I just put it in there, and like I don't have to have a conversation about a new proposition for a long time. It's just going to keep going into my retirement account or my account. So so you guys teach the 5 pillars: cash flow, life insurance, business mindset, real estate, and lending. Is that right?
That's right. Yeah.
I bet you didn't think I remembered all that.
Man, he's sharp as a tack. I'll tell you that much.
I'm sharp as a butter knife. I don't know. Start with cash flow. That's kind of an easy one, but when you're trying to get free, in my book, Failing Forward to Financial Freedom, My Life in 1,000 Houses, Failing Forward to Financial Freedom, I talked about the moat theory, which was basically figure out not what your hopes and dreams, not your aspirations, just figure out what it takes to live a normal, quiet little life. That means your house payment or your rent, your air conditioning bill, your gas for your car payment, your insurance, a couple of nights out to the movies with your girlfriend or wife. I don't know, just a basic, quiet, calm lifestyle that you could get in a holding pattern if you had to, and it wouldn't be horrible.
Right.
Get that number. I call that your freedom number, because once you can get that number, that amount of money coming into your mailbox every month, you no longer really need a job. And if you know something you're passionate about that you want to go try to make your dreams come true with. Yeah. And so once you get to that freedom number, you can walk in and tell your boss, I no longer need your services. And then you can walk out and take that 2,600 hours that you used to give your boss. You can give it all to you and your business. And as long as you don't risk what's paying that mailbox money every month, you can go out and fail all you want to and figure it out eventually. I don't think you're going to fail that many times going out there. What you have is peace of mind at that point, is that you can fail without going under. So what are the other ways? What are some of the ways to create some cash flow? I mean, there's a million of them, but what do you guys see?
There is. And I think what you said is the first thing is starting with that kind of formula at the front end. What is it going to take for me to cover those expenses? And sometimes people literally want to peel those back and get, start knocking things off. Be honest, if I don't have that conversation a lot with people, because I don't want them to have that conversation with me as far as like how to reduce my expenses. But there are things that we spend money on that we all would rather not, and that's interest and taxes. And those things for a lot of people are the biggest numbers on the page, by the way. They don't even think about, you ask the average guy on the street, what's your biggest expense? What does he say? He says, oh, it's my mortgage payment. Well, that's not true. Typically, his tax bill is much bigger than his interest on his mortgage payment. That's not the thing, but it's the one thing that we're just trained. We're just
hand that over blindly.
Yeah, we got in this whole numbness feeling to it. We don't think about it. You're sending these boxcar checks out the window, right? So for us, it is finding more efficient ways to do that. And for some people, it's not. Their situation is really simple. It doesn't require a whole lot of strategy. But we work with a lot of entrepreneurs, got lots of different LLCs and different things going on, and they don't realize there's some simple approaches. And I'll give you one. This is one that is age old, but the reality is that most people within a business are not using this. And we started doing this and implementing it. And every single year, my business writes myself a check for multiple checks, by the way, 28 of them, writes $84,000 to myself personally income tax free to me, but 100% deductible to my business. And that's called dwelling unit rental. It's something that you can rent your house out. Everybody knows you can rent a house out for up to 14 days a year, no more, and not have to pay income tax. That goes back to the Augusta rule, way back to Dwight Eisenhower, who had friends around, that owned houses around Augusta National, and during the Masters Week would want to rent them out. And it eventually got expanded from 1 week to 2 weeks. And people know this. They have rental properties or properties down at the beach or the lakes or whatever, and they'll rent it, and they know they'll have to report it as long as they don't rent it more than 14 times. But they never thought about the fact that they hold business meetings on a regular basis at their house. Or they could literally have their team from their office come to their house and meet for 3 to 4 hours a day, and they can rent their house to their business. Now, I'm not talking Airbnb style here. I'm not looking to see what the nightly rental on my house is. I'm looking at if I were to rent a similar size space that a wedding venue, for instance, may want to charge me, which is more like $3,000 to $4,000 a day for 4 hours, then I have that same capability as long as I have the proper documentation. So
what's that? It's called the Augusta rule.
Yeah, Augusta rule is basically the rule from the IRS code that allows someone to rent their house for up to 14 days without having to pay income tax. Now, if you rent it for 15 days, by the way, you pay tax on all 15 days. But as long as you rent it for 14 days or less, you don't. Now, you need to have some things in place, and obviously we work with tax attorneys, and Joey and I'll be meeting with ours actually this afternoon to do our documentation and everything for our fiscal year ends at the end of October every year. But those are just little things that people don't realize. You take, 37% of $84,000, you got some real money there. That's something that I could go buy a couple of rental houses with if I wanted to. That's something that I could increase my lifestyle, that number you were talking of, because I'm able to take dollars that I would have sent out to somebody I didn't really want to send it out to and put them in my pocket.
Well, so that's just one of the many, many, many things you find. Let's point this out. People think that the wealthy are not paying their fair share tax because somehow they're getting through some kind of loophole that's not privy to them. It's not true. The tax code is written for everyone in this country, and you can take advantage of the tax code just as well as the blue bloods. But the blue bloods are really good at it, because that's how they got to be a blue blood, was because they made it their business to understand how to operate and pay as little as possible legally. Okay? They made it their business. So when you say, well, I hate those people that pay zero taxes because I had to pay taxes this year, I want you to ask yourself a question right after that. How much study did you do to curtail your taxes? How much? Name the amount of hours you spent this year studying that. And I bet you the people that complain about the most have done zero freaking study on how to mitigate their taxes.
They've done very little. But here's the thing. There's lots of things we can.
You notice I even started to get a little pissed off there.
Well,
I like it. Bring it. Come on.
You know what I'm saying? People complain about crap, and they got the same opportunity as everybody else on this planet.
No,
if you don't have an education, it's your fault. This is the greatest infrastructure in the world. And now we got the internet. For God's sake, you don't even have to leave your house and put on any clothes to learn anything you want to learn about.
These tools exist, and it's those who are not looking for them, right? So I will put this stat out there. You mentioned that there's a misconception out there that the top 1% don't pay their fair share. I heard this stat the other day and looked it up to verify. The top 1% actually
they pay 90%.
Well, the top 1% make 20% of all the income made. They pay 37% of all the total taxes paid in every year. So they're paying more than their fair share. But here's a stat that most people don't know. And, again, we spend a lot of time with tax attorneys and strategists, because that's become a part of our business and kind of an outlet that we have these people in our community, and we connect people who are the right fit with them. But he goes through and shows stats of what the Congressional Budget Office actually puts a number, a percentage by income brackets of what they expect to bring in. Do you know the Congressional Budget Office expects someone making $1 million to pay 19% in taxes? 19%. Now, if they believe that you should only be paying 19% taxes, but yet most people are going, I'm paying 37, I'm paying 45. What is it that you're doing? You're not even doing what they're anticipating you to do.
Yeah. So because they know that there's the tax rate and then there's write-offs. You
That's
know,
right. That's
I
right.
um I once had a debate with an attorney, which wasn't my attorney shortly after this debate.
I'm shocked by that, by the way, Mitch, that you
Um,
would have a discrepancy with an attorney.
yeah, well, he had the privy of seeing my finances due to some circumstances. And he says, that's what I don't like about you conservatives is you don't ever pay any tax and for the way you live. And I said, look, I don't understand what it is you don't understand because it's not real complicated. You're obviously a smart man. You passed the bar, you know, the state attorney bar license test in Texas. I don't even know how to say it, much less pass it. And let me try to explain it to you the best I can. I, Mitch Steve, like a commission salesman. And picture me as a commission salesman. And I go out without any guarantee, without anyone prodding me or even cheering me on in the morning when I wake up. And I go start a business. And this business causes more taxation than I could ever pay in my life. And the government looks at me and says, you've done a good job of making all these taxes get caused to be paid. So we're going to give you a little break. So the reason why I pay less taxes, or Warren Buffett pays less taxes than his secretary, is because his secretary didn't move a freaking economy worth billions of dollars of taxations. You know, Warren Buffett moved that economy and he gets a reward for that. That's you know, they give you a break. Now, technically, you could, I'm sure someone will poke holes in that, but basically, in theory, that's how it works. You know, every time I'm in the house business, I buy and remodel 100 to 120 houses a year, or not remodel, but cause them to get remodeled.
Right.
So that means I basically move carpet, glass, nails, roof shingles, concrete, asphalt, grass, sod, dirt, rocks, wood, nails. I move all this product every time an order is put in. Some truck a million miles away here starts his engines and starts burning gas. Gas is taxed at like 50%, okay? And then they start rolling down the road and they have a flat and they need a tire. And then they finally get all this stuff to the store and we buy it, we pay a tax. And then we got to pay employees to do all this stuff. That's, I think it's called trickle-down economics. But anyways.
Your fair share is being paid.
Yeah,
absolutely.
Yeah, and that doesn't, and you can't hide from your property taxes. You only paid $138,000 in property taxes last year. I can't hide from, you know, you can't do anything about that. So,
well, and to Mitch, just to continue the conversation on cash flow, well, the other things, the big, I guess, challenges that come around taxes, debt, health insurance, and quite honestly, qualified plans. Qualified plans end up taking a lot of cash flow away from us and deferring it for a long period of time, unless we're using it like you're talking about through a self-directed IRA to do what our business is, whether it be investing in real estate or whatever. But we have people that are paying exorbitant amounts on health insurance. So finding ways around how to pay that, or in our tax strategies to write it off.
You can get a health savings account at taxfreefuture.com, a health savings account, and you get to write off your premium for your insurance. So if you're paying $1,500 a month, you get to write that off instead of just taking it out of your check. Yeah. Okay. And then you get to write off all your deductibles and whatever it takes. I don't know. You have to talk to your CPA, but you know, I've heard of people, not me, but I've heard of people that get a prescription from their doctor saying they need to swim 2 hours a day and they build a pool and it's written off. Yeah. Now, wow. I'm not saying to do this. I'm just saying that's an extreme idea. Think of all the things in between that and what you could do to mitigate your taxes. You just have to set up a health savings account. You know what I mean? It's that you can put in.
Well, the more you understand what's happening, a mentor of ours used to say, if you know what's happening, you'll know what to do. And most people, again, we go around the world without thinking. We just accept what the world's telling us. We become one of the herd. I know in Texas, you guys have Longhorns, right? You become a part of the moo herd, and you just fall around. Well, that's obviously, if you're listening to this podcast, you don't want to be one of those. You want to find different strategies. I mean, Joey and I talking about health insurance. Joey and I don't even have health insurance, Mitch.
Because you self-insure.
No, well, we actually are in a joint sharing. We use health sharing, so we actually are part of a group about 60,000 people across the country.
Is that church related or?
The one that we are in, yes, is actually a group called Samaritan, but there's plenty of them that are not affiliated to Christian organizations or anything. But my monthly share cost is $535 a month, and that's for my family of 6.
Well,
It's
because when you put money into reasonable entrepreneurial self-thinking hands instead of government hands, it seems to cost a lot less to do everything, and it's more effective. That's all I can say about it.
And I think that's the point of our first pillar is cash flow, is really thinking more efficiently with money. People, they let money sit, and this leads us into kind of our second one. Most people ask us all the time, wait a second, I thought you guys were money people. Why are you guys using cash value life insurance as one of your 5 pillars? And it's literally because most people have so much money sitting in checking accounts, whether it's for days, weeks, months, or years sometimes. And what we found, and this is going back to what you said a second ago when we first started the show, you said you go in any big town, you look to see what the biggest buildings are, their insurance companies and their banks. And they're really two in the same, because the insurance companies typically own the banks. And if you look at the banks, they typically own billions and billions of dollars of insurance. And so when we started doing a bunch of research back in the day, we had our clients were looking to do real estate deals and do lending deals and invest in their businesses. We found out that the most elite and wealthy were using specifically designed whole life insurance contracts to put millions of dollars through in order to do it. And the number one reason why they were doing it is because instead of getting 0 to 1% on their cash when it sat in the bank, whether it was for a day or for a year or for multiple, they were literally earning 2, 3, 4% tax-free on it. And so it was like, wait a second, here's another way to get more efficient with the same dollar that I was going to use anyway, and add a little small margin on top of it. And when you think about the flow of money, again, if we're getting more efficient with our cash flow and we're going to create cash before we go invest, then if I can add an extra 1, 2, 3% on that, then what does that do? And how is that helping me, like you said, build that moat strategy? How is it helping me not only reduce my monthly expenses in a way that I want to reduce them, but also enhancing my savings dollars that allows me to go take those risks that you were talking about and buying the things that's going to produce monthly income streams for us?
Yeah. So that's pillar number 2, using, what do you say? Life insurance, a whole life insurance?
Yeah, we don't, again, we use specifically design whole life insurance contracts. So there a lot can go into that. I don't want to spend our time diving that too deep, but there's definitely, this isn't like the policy you buy from your Northwestern rep or your uncle that sells State Farm insurance or something, but that very specifically designed. I mean, Joey, for instance, before this is how we actually met. He worked for a big major bank, Wells Fargo. I think it's okay for us to say that.
Yeah.
And I was helping people who were trying to be more efficient in the way they were paying off their houses and doing different things. And so he and I started connecting. And he realized that the bank that he works for had $18 billion in cash value life insurance. And he was like, wait a second,
by the way.
If this stuff that you're telling me about, Russ, that I should be putting my cash in before I invest it, and the bank that I'm working for has $18 billion, and it's probably something I need to know. Now, again, that's not the policy that Dave Ramsey's railing on that tells you a dumb thing to put your money in. It's obviously designed a little bit differently, just like we were talking about a second ago with taxes. It's not a...
It's all in the minutia. There's the niche, and then there's the niche, and then there's the niche below that. And you get really specific about what you're trying to accomplish, and don't be surprised if someone's got an angle that'll help your cause. First thing you got to admit is I don't know. Second thing you got to believe is that probably someone out there, if there is a way to do it, knows, and that you can find it and find some help and get someone who's got their 10,000 hours in that department to educate you about it.
Yeah. And as I was learning this myself, I had the biggest problem was, okay, I'm making more money. I don't know what to do with it, but I want to keep liquidity of my cash, right? I don't want to put it into things long-term that I can't control. I mean, I had just lost money in 2008 through all the things that I was putting money in that were market-based. And I said, there's got to be a different way. Like, there's got to be something that I can put money into that I can still gain access to, and I don't have to roll the dice. Like, I'm just not a gambler by trade. Like, if you see me in Vegas, I am not going to be putting any money in anything, because I know it's just completely hobby money at that point. It's gone, like, before I even start. So I did not want to continue that. And here I was, this is 2009. I'm sitting there, okay, I've got 2 little girls at the time. I'm thinking, okay, I need to start saving for their college. I've got this cash flow. What can I do? Well, the other options, like 529 plans, for instance, were all those things that I didn't want. They limited my access to the money. I had to use them for specific reasons, like for their education, whether they ended up needing it or not. And it was all going to be invested in things I didn't know or understand. So why would I do that? It just didn't make any sense. And then here comes Russ. He's like, hey, by the way, your bank puts a bunch of money in this and it does all those things you're talking about. How much you want to do? And that just began a huge course of education for me. And thus the name Wealth Without Wall Street was born a few years later. And we started just taking back control of that money.
Which
How can
leads
people
us,
get how can people get more information on how to use life insurance for specific reasons?
man, I would tell you, obviously we love we teach on this constantly on our podcast, Wealth Without Wall Street, but the best resource, and this is where I think the 2 of us got our start in this, is a book called Becoming Your Own Banker. It was written by, now he deceased. He passed away earlier this year at 88 years old. A man named Nelson Nash, and you were talking about trickle down economics. He comes from that kind of school of thought. It's actually a name called Austrian economics, where it's like common sense economics. It's figuring out ways to use our money well. He actually gives stories from an example of one of the largest banks in the United States was there in Texas. He demonstrates all sort of little basic things, but it is, how do we use our money better? And it's not one of those things that, again, it's taught. I was in the financial industry. I was taught by a lot of mutual fund companies. I was never taught by an insurance company any of these strategies. All of this stuff is learned outside, right? The ideas of how to be efficient with things never comes from the top down. You got to learn it from the bottom up. And for us, it started with there. So we do a lot of teaching on this within our show, in our group, in our community. We have a monthly teaching, and for people who are doing this nationwide, some people might hear this term called infinite banking. That's something that they would resonate with, or cash flow banking. There's a lot of different terms that are used out there. But it definitely requires an approach of finding out how to use these tools and put the money in, but it's not about keeping the money in. So for individuals who know, and kind of moving into our 3rd pillar, people that know what to do with money, like yourself, you've got $20 million out at work, and that's one of our pillars. But really, what you have created is a business. You created a business that allows you to do those things. And that's one of the things that I think that most of the people we talk to, and they're trying to figure out, how do I create, we always say passive income, but we know there's nothing that's truly passive. It requires lots of effort on the beginning, and requires some as you continue to go on, otherwise it'll go away. But business ownership is the biggest one that we focus on, because the reality is you probably have spent, as you said earlier, maybe 10,000 hours learning something. Why in the world would you not try to see if you could take that knowledge and invest in it? If you could put $1 in your business and it can produce 5, why would you try to take $1 and give it to somebody else to get 8 cents on it? So start with the thing that you understand first. Now, some people just don't have that expertise. They're not gifted at business ownership. They're not, they're born to be support people, to be the implementer, not the visionary. And that's beautiful. So if that's not your gift, then find these other areas. But for us, we always say, invest in yourself. You're your best asset. You're your best investment. Anything that you can do within that realm, and find other avenues. So, we started this community earlier this year, and it was birthed out of the idea of, man, there's a lot of people that have questions about just what you're talking about, the life insurance stuff. That's a big part of our community. But also they're looking for passive income strategies, and they're looking for help, to grow their business. So for us, it was very easy for us to create this side business, which is right in line with what we do, but it's a monthly subscription. It's something that we've created as a passive income model that produces income, and we put partners in there, both tax, legal, business consultants, real estate investors, all these different people to continue to add value to the group, but it's right in line with what we know. And that's what I would say. If you're listening to this, you're looking for ways to create income streams, find ways to do it in and around your business. And maybe it's that you need to find ways to make your business more passive, because that's Joey and I are trying every single day. And, you know, we had the pleasure of interviewing you on our podcast the other day, Mitch, and you were sharing with us on the podcast different things that you'd been learning and ways to make your business more passive, and learning from what other people were teaching you in that. And that's exactly what we've been doing for the last, I don't know, 6 to 12 months, is how do we start removing ourselves from the active roles? Because again, we want to make the thing that we know most become more passive, produce more income for us that we don't have to work for.
Yeah, just another example. Somebody we were meeting with yesterday has this really specific expertise of marketing. In fact, he's like the head of a marketing company, big firm here in Birmingham. And we're meeting with him, and he's telling us, man, I really just want mailbox money. I have to do something with this cash. So of course he's looking to us and saying, okay, well, I like what you're talking about with these life insurance policies, but then what? Because the life insurance policy is not the end. The cash being in there is not the end. It's what are you going to then do with it? And he said, man, I'm really passionate about helping startups go from that startup phase to, you know, multi-millions. And I know I can immediately, when someone tells me what's going on in their business, it's like I'm in a different world. Like I can immediately tell them what they need to do from a marketing and sales perspective to increase their brand, to increase their view. And he said, I'd love to just kind of be a part and just take some equity stake in these companies. And we said, well, that's exactly what you should do. And so he's immediately now thinking, okay, how can I then turn my expertise and invest in what I know best, which is, like you said, 10,000 hours I've already invested in myself. Now I'm going to put it to work and create mailbox money outside of, you know, again, what most people think is normal, but in businesses that he can then have a small piece of. So anyway, that's just one example of how we use that business pillar in Wealth Without Wall Street.
Yeah, I had an example when we were talking real quick. So first of all, for those who don't know, we take a lot of things for granted sometimes. 10,000 hours, where's it come from? What's it mean?
I was going to ask you that.
Well, no, we work about 2,000 hours in a typical year. So that's usually about 5 years of our life devoted just to going in and out of a job. That's
okay,
what I would say.
But the guy wrote a book called The Tipping Point.
That's right.
Malcolm Gladwell. And he talks about and shows in all these examples, the difference is, I think it's The Tipping Point. He wrote a lot of books. I might be getting confused. Malcolm Gladwell brought 10,000 hours to the forefront. That the difference between being really good and being the very best in the world at what you do is 10,000 hours. You have 10,000 more hours than the guy that's really good.
Huh. Yeah.
You know,
you're absolutely right. Yeah, when you have that amount of knowledge and expertise in something. By the way, I mean, I don't know if it was in that book or another one. I've heard too, if you read 3 books on any subject, you've become an instant expert as it relates to everybody you hang out with, because most people are not reading on that subject.
I heard it put like this. If you took all the books about the Civil War and you throw them all in your backyard within your fenced in little area back there, and every morning you jumped off the roof into that pile of books and you pulled up one book, opened it to any page and read for a half hour. If you did that 7 days a week for a year, you would be a world's authority on the Civil War if you had any kind of retention at all.
Absolutely.
Random, open the book, any page, read for 30 minutes, throw the book back down. Tomorrow, jump back in the pile, pull out a different book, any page, read for 30 minutes. By the end of the year, you would be, if you had any retention at all, you would be classified as a world's authority on that subject.
That's right.
Is there a pool in the backyard though? Because I'm probably not going to jump into the book.
Okay. So my thing though, as reverting back now, we covered the 10,000 hours. My example was, if you own a lumber yard and your job is to take trees and to make them into boards. So people bring you trees and then they leave the trees with you and then you hand them back to them in the form of nice 2x4s, 2x6s, 2x12s. You hand them, you know, long boards. You're left with something that's coming out of your exhaust called sawdust.
Right.
So you either got to pay to haul this sawdust off, or you can create a business doing something with this sawdust, soaking it in poison and sprinkling it around houses and calling it a pesticide or a, insect killing, or glue it together and make a board, or I don't know, but you got this stuff and it's here free. What the hell can you do with it? Farmers and dairy farmers, they have a lot of cow dung, cow crap. Well, guess what? People buy cow crap, so if they buy cow crap, they'll probably buy whatever's coming out of your exhaust too. You know what I mean?
Well, you're exactly right. I mean, that's what every, what do they call it? Paper mill in the country does with, they're sitting there trying to get the pulp out of the pine tree, but they've got all of this bark coming out in the form of sawdust and everything else. And what did they start doing? They started burning it and created all the energy that they needed to run their whole power plant plus some. So then they just connected to the lines that were feeding them power and pushed it backwards and started getting a monthly check for that. So yeah, you got to think of
the
how,
byproduct is just as important.
Yeah. How do I take the things that I know and I'm already working with and figure out how to get more useful, more efficient, kind of going back to the very first pillar. But then the fourth one we focus on, Joey, why don't you dive into that?
Yeah, we do not pretend to be the expert in this, but that's why I'm glad to have guys like you in our community, Mitch, to add value here is real estate. The fourth pillar is real estate. There's more millionaires created out of real estate. And so if you know what you're doing, and we're talking about, we cover all sorts of strategies, as you can imagine, flips, long-term rentals. We have short-term rentals like Airbnb and VRBO and those sort of things. There's strategies all around that, as you know, flipping land.
Storage room facilities, mobile home parks,
yeah.
You name it.
We cover all those on our show, and within our community, we have those experts that you can then lean on and learn from. We are not those people. Do not ask me or Russ about rentals, okay? Because I can only tell you the number to Serve Pro, okay, or what not to do. But other than that, that's why we have all these experts in our community.
Yeah, so let's talk about that. You have a Wealth Without Wall Street community. It's $40 a month. We quote prices on here sometimes, but I always preface it with, it's $40 a month today at the time of this broadcast. This thing's going to be archived for months, if not years. So be sure and check. They have the right to change the price, add value,
right,
decrease the price and spend less time with it. I don't know. But so today it's $40 a month. Ridiculous value. You have a weekly call, I know, at least, and much, much more. Go to REInvestorSummit.com/no wall street. Okay. REInvestorSummit.com/no wall street. That'll take, just so you guys know, Russ and Joey, this takes them over to the show notes. Your people are going to get with my people. You're going to decide what you want over there. If you have, I don't know, if you have courses, other opportunities, if whatever you have over there, if you have boot camps or meeting dates or speech times, you can put it all over there. It's evergreen. You can change it whenever you want, and you get over there, and I'm sure you guys will think of something to give away. I surprised them this morning, say, hey, I need something you guys can give away. They said, we don't have anything off the top of our head. I said, well, get something and put it in these show notes. So, and so, it's a pleasure talking with you guys. I could talk to you guys. We could talk forever. We could talk for a month and probably just get warmed up. But the point is, there's resources out there. Wealth Without Wall Street's one of those resources. Get there, get to know them, invest a little bit in yourself, $40 a month. I bet you in a short period of time, I bet you before 30 days is over, you'll find a hack that saves you $100 a month. So this $40 is not an expense if you take it the way it's supposed to be spent. And make that your goal. I'm going to spend $40 a month for 30 days. And if I don't like what I hear, I'll get out. But if I save myself $40 a month or more, I'm going to stay in this thing forever and learn how to create thousands of dollars of savings or income. So go to REInvestorSummit.com/no wall street and see what Russ Morgan and Joey Mure have to offer. And I don't know, you guys, anything we need to say before maybe we wrap it up?
Mitch, just thank you for doing what you're doing, just spreading the message, right? Pushing back the frontiers of ignorance, helping people like stop trading time for money and teaching them strategies to do it. Man, I applaud it. Thank you for having us on. It's been a pleasure.
It doesn't happen overnight, guys, but if you want to learn how to get free, study freedom. I mean, it won't be that long. It'll, it might not make sense at first or seem a little foreign to you in the beginning. Of course it will, but the sooner, think of where you were when you started high school as a freshman and where you were when you graduated as a senior. I mean, it took 4 years, a lot of big difference in who you were when you started and who you were when you got out. And they're not even teaching you anything there.
No doubt.
They're not even teaching you
Exactly.
anything there that really matters.
Indoctrinating.
So imagine if you're in a room where they actually taught something that mattered. Okay, well, this is Mitch Stephen with the Real Estate Investor Summit podcast. I'd like to say thank you to taxfreefuture.com. Please go to taxfreefuture.com because you will not believe what your financial advisors are not telling you. I'd like to thank everybody out there for stopping by to get you some Russ Morgan and some Joey Mure with Wealth Without Wall Street. Thank you for stopping by to get you some of that. And I guess we're out of here. See you on the next podcast. Bye now.